Welcome back. Let's get more reaction to yesterday's budget speech. I'm now joined by Thomas Loban, of course, a legal taxation manager from Tax Consulting South Africa. Of course, the finance minister announced new tax brackets for personal income taxpayers. Let's discuss this. And thank you so much for your time, Thomas. I mean, for anyone who is not sort of like aligned with tax, or tax is more of a jargon, this discussion is definitely going to be helpful. So let's talk about what the minister had to say. Before I get into personal tax, he touched on the corporate income tax rate, which will be lowered to 27% for companies with years of assessment commencing on or after the 1st of April. What does this mean then for companies?
Well, obviously it means companies will pay 1% less tax, which is a welcome relief to them. But our view is that companies should still see this with circumspection on the basis that at the same time, what National Treasury is seeking to do is limit the allowable deductions for interest expenditure, as well as assessed losses that companies experience, which will be a pertinent issue in a post-COVID world.
Is that increase by 5% to the personal income tax good news to taxpayers?
Well, it's definitely welcome relief for individuals, and many of whom have been impacted over the last year. The fact that it's above inflation is also a very good message for National Treasury to send that they support the public. How they'll be collecting those other taxes through increasing UIF, a few rands here and there, should make up some form of shortfall. But if it's effective, we'll see.
Yeah, and I know that the minister also mentioned that they plan on collecting at least 1.21 trillion in taxes in the 2020-2021 financial year. Is this, an accessible goal, especially given the announcement he made towards personal income tax and companies' income tax, amongst other tax hikes?
Well, following the medium-term budget policy statement in October last year, there seems to be much improved sentiment in collections. However, government doesn't have the best track record in collecting revenue, and especially in the current environment economically, it remains to be seen. Anything is possible, that we definitely know by now. But we'll just need to see it as this year moves forward.
Right. For every taxpayer in South Africa watching our conversation right now, I mean, what are some of the consequences and ramifications of not complying with staying up to date with your tax payments?
Well, this is something that's definitely relevant this year. Recently, there's been an amendment to our tax administration laws to the effect that misconduct that was done both willfully and without just cause was prosecutable. Now, for certain offences where taxpayers find themselves afoul in their obligations, not filing their returns properly, they could be, just on the basis of negligence alone, subject to a fine or up to imprisonment of up to 2 years. This falls down to the NPA at the end of the day and SARS enforcement mechanisms, but taxpayers definitely should be cautious when approaching their tax obligations moving forward now, especially.
Right, and of course it has a bigger impact on the economy. I mean, the funds and resources that are meant to service the country are at a shortfall, and with the impact of COVID-19, surely that should be a disadvantage for SARS.
Well, not necessarily. SARS has been making vast improvements of late following the Nugent Commission's recommendations in cleaning up its act. At the same time, SARS is being allocated additional funding to improve its infrastructure and information gathering mechanisms. So our view is that SARS will be getting better and better. We certainly hope so. But again, we do see in the past that you need to watch these things as they happen. So this will definitely be a developing thing.
All right, Thomas, thank you so much for joining us.